online broking firms are slowly garnering a bigger pie of the brokerage business in the country, as is evident by the growth share numbers as well. And while convenience is one of the big factors, another distinguishing factor for most of the players is the comparatively lower brokerage fee charged by them. In fact, if you speak to users, they would say that that was one key reason which made them move from where they were to the current platforms. And of course, then the technology reimburses any kind of confidence that customers have in these brokerages. So can the edge be sustained? And what are the hurdles that some of these companies could be facing? To talk about that on the eve, or rather, but 2 days post the listing of 5paisa.com as well, we have the CEO of India's only listed online broking firm, that is 5paisa, Prakarsh Gagdani, and the co-founder of Zerodha, Nikhil Kamath. Gentlemen, both of you, good morning and thanks so much for joining in this discussion. Prakarsh, let's start off with you. Recent listing as well. A bit of a dichotomy about the discovered price within the exchanges, but that's not the scope for this discussion. The scope for this discussion is the growth rates that brokerage firms like you, Zerodha, and the others are seeing, and whether these are sustainable over the course of the near term.
I think online broking space and the kind of fintech space that we are into is at a very nascent stage. And we are seeing a lot of traction. So it is definitely sustainable over a longer period of time. At least for the near future, I can see that it is definitely sustainable. Because just a start, people are getting to know about the online broking space and the fintech companies who are now offering practically at, like a company like ours is just offering at $10, which is almost 98-99% cheaper than what is available in the market. So that's a huge advantage for a retail investor. So we're seeing a lot of shift towards this business, and definitely this is sustainable over a longer period of time.
Nikhil, good morning. And you've been around for a while, and we've spoken in the past about how the platform was attracting more and more people to not just the basic business, but people talking about other businesses coming in as well. The basic question is the meteoric growth rates that companies like you and 5paisa have shown in the recent past. For how long is this sustainable? I think Prakarsh said that near term he certainly sees to be sustainable. How long is this near term?
I think the penetration of stock markets in India is still in the very early stage. I think less than 10% of our population even has access to stock markets. And as this number grows with more people coming into the banking umbrella, we will only see more and more people, drive investments into stock markets and other instruments like that. So I think there's a long way to go. I think we are at the very beginning of something which is a lot longer.
Yeah, which I'm sure of. Okay, let me rephrase my question. I'm sure that the market share gain game and the penetration game is here to stay. But the same question to both of you. The question really is about the growth rates. Now, in your business models, I'm sure you're factoring in what's the quantum of growth that you will see for the next 1 year, what's the CAGR growth that you will see for the next 3 years or next 5 years. Are there estimates they are putting out in the public domain as well about the quantum of growth to your investors if you're putting those out? Nikhil, let me start that question with you first.
Well, we've been growing at over 100% every year for the last 8 years, and we see that trend continuing. For the next year, we expect the same level of growth. In fact, for the next 3 years, we expect the same level of growth.
But on what base, the same to both of you, what are the numbers you're doing? Are you counting in terms of accounts? If it is in terms of accounts, so what is the base on which you're growing 100%?
Well, in terms of account, we now have about 5 lakh clients, and hopefully we are planning to hit 1 million by sometime next year. That is the pace of growth we are seeing month over month right now, and if it is going to continue, we should be there.
Prakash, what are your base number of accounts?
We are right now just a 20-month-old, so we are just around 25,000 customers, but the growth rate is almost 80 to 85% quarter on quarter right now. So we definitely would be catching up past 100,000 customers very, very soon.
Small numbers, right?
That's a small number.
So the money you make is on volume, I assume.
Absolutely.
So you would need these volumes to grow multi-fold.
Correct.
For you be able to make any sort of serious money out of a business like this.
I absolutely agree with you. But if you see digital space, it is like that.
I know.
On an offline space, to get to 100,000 customer or a million customer used to take around 15-20 years. Now that's not the case. I mean, you can have maybe a couple of years and then you have a player in the same zone, because that's the power of digital. And why I am so confident about is that see, if you said there are two sides of the story. The first side is the lower penetration of the demat accounts, and that's not been just now. It's been since ages, and we've been talking about this is hardly 1% or 2% that of the total population is actually having a demat account or approaching financial markets. But I think that is changing now purely because of the kind of internet penetration that we have seen in last 12 months, the kind of smartphone users we are seeing. So we have almost 70% of the customers coming from smaller towns where you don't have an access to a bank or a financial institution. So that gives us a confidence that it's just a start and it's a long way. You won't even see the kind of...
That story holds true for all Indian financial services,
it
right?
goes through,
okay, so I have a more
absolutely.
specific question to both of you actually. So what is the nature of the clients that are coming in? Are these first-time equity traders or are these people who are actually downgrading from having worked with a brokerage which was charging them a lot more and hence are now thinking that your platform offers them more value because they don't have to pay the fee but they can transact as much as they want? What is the nature of the clients?
So it's a mix of both, but largely dominated by people who are the first-time investors. They're new millennials because they're coming to the financial market for the first time, and there are a lot of people who are coming to the internet for the first time and approaching us. So it's more skewed towards the people who are coming as a new millennials.
Don't you think that's a risk, Niraj? I mean, if it's the guys who are sort of biting into this for the first time, then it's not the value proposition which is drawing people into these online trading platforms. I mean, I wonder if it is.
Well, so two ways to...
I'm sure Nikhil will want
No, okay, so yeah, maybe let's get in Nikhil's thought first before we kind of give our editorial judgment as well. But Nikhil, you've had a history of 8 odd years now. Is the nature of customer acquisition changing ever so slightly? Right. Because one would presume that traders from a bulk, but are new long-term serious investors into your mutual fund products or otherwise also increasing in a big way? Has the nature of client customer acquisition changed in the last 6 months?
Well, the goal has been to try and get new people who have never invested into stock markets and let them begin the process of investing. I think we have a mix of people who have switched from other brokers because we've been around for a while, and 8 years, a lot of people have switched from traditional brokers who were more expensive to us. And now we are seeing, with the birth of all kinds of technology that we've built around our trading platforms, people are coming to us more for that technology rather than the price alone. So you might have somebody who comes to us because we have better charting than others. You might have somebody who comes to us because we have better research than others. So even though we began as a no-frills discount broker, the new client acquisition is happening a lot more based on technology now, for us at least.
Okay. And Prakarsh, I would presume that's the same for you as well. A lot of people coming into technology. In fact, I've seen day traders speak volumes about the kind of ease at which the transactions are being done on online platforms as well. My question to you is, this nature of the customers, I would presume, who are coming in a big way, apart from being first-timers, would be the ones who are traditionally, as Ira said, transacting not really with the high-end institutional brokerages wherein the institutional investor requires the research from the brokerage house as well, but people who hitherto had no other choice but to go to a mid-sized or a small-sized broker and having to pay high brokerages, now opting to go on to your platform because he or she believes that he has the basic knowledge to be able to transact as his will and doesn't need the advice of his relationship manager, so to say, who's sitting out there at the brokerage.
I don't think the first point, which is a lack of choice, is actually the answer. People have choice. I mean, if you see even the full service brokers right now, everyone has an online platform. So you practically go on internet and you will find an option which are people like us and also the full service discount brokers.
Is that as cheap?
But yes, you're right. It is not as cheap. Rather, as I said, we are almost like 98% cheaper. So cost is one factor and very important factor. The other factor is the ease. That I have a mobile app which I can download simply, I can understand simply, and I can open account online without any paperwork. I think the simplicity of the product, the price are the driving factors why people are coming more here. and also a choice of products that we offer. So it's not just direct broking. We also offer mutual funds. We are starting with our insurance platform, and then you have loans and all other financial products. So it is basically a financial supermarket available on your app, just like any other online e-commerce app.
Is that crowded? Is that pocket crowded? Because you clearly, Zerodha, etc., clearly had this advantage of being able to get in customers and show them value because you're giving them the same or a better online experience at a fraction of the cost. What about the other product services? Is there a bite for the bullet for the same product?
There is definitely a competition, but I don't think so. It is crowded because what matters is exactly what you're offering, and are you able to satisfy the retail investor what he's looking for. So you may have a lot of players coming in even now and maybe later, but what differentiates is definitely the experience. And I think that can't be explained, that why do you have only 2 or 3 people on online if you have an Amazon or a Flipkart, and why not others? You can't explain that. It's all an experience. So I think same goes for financial service providers like us on the online space.
Nikhil, you were mentioning in that previous answer that you're starting to sort of supplement your trading services with other factors like charting, research, etc. In doing that, are your sort of costs going up? In that case,
Right.
probably tougher for you to make money, or you need slightly stronger volumes to make money?
Costs are going up based on, we've set up a tech team which is quite large right now, and the costs have definitely gone up, but the amount of incremental business the technology is bringing in right now definitely warrants it. And it's not just charting, but we have a lot of insight going into your trading platform, even in order execution, and how we can better manage your orders so you get faster executions on the exchange and stuff like that. So a lot of technology, not just one particular facet of trading. We're going around, now we are building a tool which will help you do technical analysis and automate on your own without having any knowledge about coding or computers or anything like that.
So as we get
all these
towards
things together will definitely come together and improve the.
No, sorry.
Yeah,
I was
sorry,
just saying
go
that, as you go towards, this era of robo-advisories, etc., do you think these platforms will sort of have to merge? Because a standalone discount trading platform will probably not be able to do enough to get value out there for the customers, right?
True. I think we are transitioning into a process where it will be like a robo-advisory and all of these things merging into one platform. But we will have to evolve. The price was the draw initially, but it can't go on forever because right now there are many others competing on price. So we have to come up with other stuff which will help us continue to garner new clients.
You agree?
I totally agree. I totally agree here. Rather, our platform is right now already bundled with all that.
And with the robo-advisory.
With the robo-advisory and other service offerings. So I totally agree with that. Yeah.
All right.
Great. Gentlemen, thank you so much for joining in and giving us a flavor, if at all, of what this platform entails and what's the way ahead, and all the best for the growth rates.
Thank
Prakarsh
you.
as well as Nikhil, thanks for joining in on this discussion.